Hello, welcome to today's video. I'm Lecky from KOSB Finance, and in today's video I'm going to be explaining to you how you can easily spot the market structure using indicators. Now, a lot of persons basically don't understand the hierarchy of the market and what the market really does and what it means to trade using market structure. So today I'm going to actually be debunking that belief or that stress that has been holding you back from profiting in the market. So I would like you to subscribe to this channel if you're new here, and you if you are not a member of our Telegram channel where I send out my free trades, do yourself to join the Telegram channel. All the links are in the description below. And also, if you would like to take the free course that I've created, you can also see the link to the free course in the description below. Now, quickly I want to say this. We also hold webinars, free webinars every month, once in a month, and the persons that participate in that webinars are basically those that are actually active in both the Telegram, the YouTube channel, those that comment, that show enthusiasm in learning how to trade. I pick people randomly, and even from subscribers also on the YouTube. So that's the reason why I implore you, if you're not a subscriber, do yourself a favor to subscribe, because you might just be very lucky to be picked for the webinar. And in this webinar I'll be diverging so many things. I'll be showing you my strategy, what I look out for in the market, how I actually get into the trade from beginning to from scratch to finish. So you'll be doing yourself a lot of favor by subscribing to the YouTube channel, by commenting in the YouTube channel, by being part of what is happening in the Telegram group, and even it's all a free platform. So you're doing yourself a lot of favor by being part of this community. So one thing I need to know is, in this community all we do is make money and we don't lose money. Yeah, when I say we don't lose money, I'm not saying we don't actually get losses, but our wins are more than our losses. So do yourself a favor to be part of the community and be a winner. Now quickly jumping into why we are actually creating this video. Now this video talks basically about market structure, and in market structure you basically cannot avoid some intricate parts. Now the truth is, I'm trying to see how I can make this very easy for you. That is why I'm going to be showing you the easiest way you can actually achieve this using indicators. Now a lot of you basically won't see this kind of video anywhere, because this is something that I personally use and I've tested over the years, and it's something that actually works. Now, what is market structure to start with? Market structure is understanding the progression of the market. Now, this is a trending market. Now, you know we have three types of trends. We have the downtrend, the uptrend, and the ranging market. Yeah, that's a sideways. You understand, when it's consolidating. Yeah. Now, this is an uptrend and this is a downtrend. Now, as for me, I'm a trend trader. I basically don't care what happens, if the market is ranging, I don't do anything. If the market is pulling back, I basically don't like to do anything, because you basically might not know when the pullback will end. Yeah, so basically this is this. It's not like you can't basically know when the pullback will end, but I just want to minimize my losses by giving myself a lot of stress to start analyzing the market to say, oh, the pullback has started. Pullback should be ending soon. I don't want to have myself caught up in all that jargons. All I want to do is I just know that, oh, this is an uptrend. Fine. I just wait for when the market reaches a pullback, ends the pullback, and I fire on. That's it. So basically, there's an uptrend market structure, there's a downtrend market structure, and you must have seen this on several videos or lessons that you've watched. And but I'm going to be actually breaking this down properly for you today, because it's different understanding this from I would say um practicing it on the charts. Yes. So the first thing you need to do is, first of all, as you know, this is your low, which is the beginning, and this is your high. Then this is what, this is a higher low. Then this is your higher high. Then this is what, your second higher low. Now you notice that this low is higher than this. That's why I'll call it higher low. This low is higher than this. That's why I'll call it higher low. This high is higher than this high. That's how we'll call it higher high. You understand? So as long as this continues, the market is intact. Now, another thing for the lower time frame is, this is your high and this is your lower high. Sorry, this is your low rather. Then this is your lower high and this is your lower low. Then this is your low, this is another lower high. You understand? So you can see the progression. This is high, lower high, lower high. This is lower than this. This is another, this is a low, and this is lower low. This is lower than this low here. Now, debunking some of your beliefs. Most of you, based on what you've watched in some places or some videos, some YouTubers, they tell you some jargons that the market moves this way, goes up, pulls back, goes up, then when it's coming back, they expect it to actually end here, isn't it? They expect it that, oh, once the market retraces or pulls back to this region, then they know, oh, they expect the market to pull back. Mark my words today, this is not true. This is 100% false. Now, if you have a good understanding of the BTMM strategy or supply and demand, you will know that this is not always true. It's not always true. Yes, it is right. When the market touches here is when you expect a pullback, because at this point was where you had so many at this point you had so many sellers. That's why the market pushed here. So when the market pushes above here and breaks this level, most people usually expect that the buyers will come and wait around this area to push the market higher, isn't it? But it's not always so. What if the buyers decide not to wait here? What if they want to make more money by coming to sit around here? What do? That means at this point, if you also came here to buy, that means from here to here, you would have made your loss, you would have hit your stop loss, and you would have been crying. Then the market now projects higher. So you see the reason why this is not basically true. And trust me, from here to here, a lot of persons actually feel that the analysis was wrong. No, your analysis was not wrong. You only made you only you only followed a misconception that has made you to lose money from here to here, that you'd have gained some patience before the market pushed higher. So today I'm going to be showing you how you can actually spot out all this nonsense using indicators. It's very, very easy. You can actually spot out this using indicators. And how do you do that? Is by you just waiting for the indicator to tell you that, oh, at this point start expecting something positive. You get my point? So you start expecting something positive. So if it gets to this level and it start going up, the indicator will also tell you that, oh, at this level you should start expecting it to start going up. But if at this, even if it gets to this level and the indicator has not told you so, then it's advisable that you just let it be and let the indicator give you some more confidence and assurance that, oh, you should start expecting a continuation of the trend. So quickly, let me just jump to my chart. So first of all, let me just recap what I just explained here. The market structure for the uptrend is this. The market structure for the downtrend is this. Then also understand that the market does not continue in its direction when it touches the previous tip, which is here. That is, it is not an assurance, it is not a myth that the market must continue or the pullback must end when it touches this previous high. It's not a must that this this must continue when here touches here. Sometimes it might come as high as this before continuing downwards. So you can see that even from my diagram, you can see that I didn't make it stop here, and it's for a reason, and basically because of my personal experience, that's why. So quickly, let's just don't jump to my chart and you understand what I'm saying. So now this is a naked chart that you would think, okay, what is the trend of this market? What is the overall trend of this market? Like you can see this market, you can see here, if you look at this market, as for me, this particular market is actually in a downtrend. Okay, I'll explain to you why later on. Now you can see in this place, you can see it's an uptrend. All right, so quickly, the indicators I'm going to be using to explain this to you are simple. Let me just put up my indicators right here. All right, now you'll be making use of moving averages. Now the first moving average you'll be using is the moving average 13. Okay, so 13, let's make that red, and you click OK. All right, then next indicator you'll be putting is indicator 50. I usually like to use exponential for all my indicators, so both 13 and 15 are exponential moving averages. Okay, so this 13, this is 15. All right, so that is that. Now quickly, how can we actually spot the market structure? Remember I told you that this market here is a downtrend. Okay, because I really understand how the market works. Even without indicators I can spot it. But how did I know it's a downtrend? Simple. Now the market moves up, down, up, down, up, down. Now whenever your 13 crosses your 50 moving average, you can see this is the beginning. You can see this is the beginning right here. You can see this is beginning right here. This is the beginning of the chart of the market movement. It dropped. You can see 13 crossed 50 here. It dropped and never crossed again. Now you can see that when it crossed, you can see it broke this level. It broke this level. It broke all the previous levels. Okay, look at it. You can see the market went down, went up, went down, went up. You can see from here, this is, sorry, you can see that here we have, from our discussion here, this is an uptrend. Now you can see from here, you can see that there's a higher low. You can see that this is another higher low. You can see the market I see 13 crossed 50 downwards, give us higher low, then it crossed, this is a pullback, then crossed back upwards, then 13 crossed 50 again to give us another leg of the uptrend. Then you can see 13 crossed 50 again to give us a pullback, then this give us a lower low, a higher low rather. You can see this is higher than this, so you can see this confirms this uptrend. Then you can see this is the next, you can see 13 crossed 50, came up and came back to cross 50 again, isn't it? You can see, sorry, sorry, let me quickly delete this. All right, I need to use this one. You can see here we had another pullback here where 50, where 13 cross 50 right here. So this is another pullback. From right here is another pullback. Now you can see the market went up again, it crossed here a little bit, then you can see that the market started having what we call a slow momentum. You can see, so you can see this progression, low 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 low. What happened, they crossed, 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 crossed. So the easiest way you can actually know where you should start picking your trades from is at this point here. Now a lot of persons like to get in between here. Yes, it's good to get in between here, but trust me, you have more advantage when you wait for the market to cross, to pull back, then before you now enter. Now for instance, let's assume you enter somewhere here. Let's assume you enter somewhere here. There's no guarantee that this market might push higher before dropping. So it's best you wait. Once you've missed this pullback, try as much as possible to be patient, to wait for this pullback before you push in, before you enter the market. So you'll be able to enter the market here and even make here your target, or make here your target, or make here your target. You would have made a lot of money. Trust me, you can even set this and go to bed. You won't have any issues. This is how I actually take trades, and I go to bed and I wake up and I'm in profit, you know, because I've seen the market structure. I know that this is certainly going upwards. So I entered at the pullback. Definitely, I set a convenient take profit, and it's for sure to hit that take profit. Now, definitely, it's an uptrend. So it's certain that the market is going to push, like when the market pull back from here to here, when the market pushes up, since an uptrend, it's certain the market is going to surpass here, this level. As you can see, it pushed above this level. So I can make from here to here my target. I can just enter here, then place here as my TP, because I'm certain it's going to enter here. Though that's not actually how I set my TP, but that will be in another video entirely, how I consider my take profit. But basically, I'm just trying to make you understand that when you trade along with or recognize the market structure, it gives you confidence when trading. So you might want to enter here. No, if I were to be in my shoes, I won't even bother entering around here. I wait for 13 to cross back down this 50 for me. Then now know that, oh, this is the next pullback. This is when the next pullback should be coming to an end. Then I enter. Now you notice that this was when the market actually crossed, you can see 13 crossed 50 here, then came back up, then crossed 50 here again. So this was the last pullback. Now how do you know that the trend has changed? You know the trend is about to change when 13 crosses downwards to form a pullback, but instead of it ending above this level, or it can end at this level, or above this level, but it must not end below this level. The moment the pullback breaks this level, then you know that the market structure has changed. Then you have to start looking out for sell trades. Now you can see the market broke here, You can see in my own in my own vein in my own vein I basically won't trade this when the market dropped. You can see it broke this level, and I know that, oh, the market might start a downtrend. So what will I do? What I'll do is I'll just wait for the market to cross back upwards to confirm. And once the market crosses upwards, what I want to see is I want to see a lower high. You can see this is a high. Now let me show you here. You can see this downtrend. You can see the market has been going up, going up, going up. Then all of a sudden it formed this level. Now broke this level. This level was now lower than this. You know, we had something like this. You understand? So this mark, you can see this level now. It broke this level. So as it broke this level, then that tells me that the uptrend has come to an end. So what am I waiting for? I'm waiting for this to happen. That is to have a lower high. So you can see your lower high right here. You can see this is your lower high, and because this did not come back to this level when your indicator crossed back. So the next thing is I'll actually forfeit this, because trading is about patience. So you forfeit this, then you wait for this to happen. Once this gives you a confirmation of the downtrend, then you can enter here and you sell. Then you make all this profit. So basically trading is about patience, and you just have to be very patient. Now a quick one more thing I just want to show you before I actually end this particular video, so that you can understand what I'm actually talking about. Now you can look at this. Now look at this structure. Now look at this particular structure. Now you notice that this is an uptrend, isn't it? You notice that the market went up, came down, went up, came down, went up, came down. Now at this particular level, you can see that the market did not drop below this. It was just bouncing on this particular support. Now as long as it doesn't break this support, then it means that you're still in an uptrend. Remember, it didn't break this level, so it continues. Now you notice that the market went up, made another higher low here, then went up, made another higher low here. Now but you can see that this time around it came to this same support again, came here, retested this same level. So that means the uptrend is still intact, because it didn't break this level. You can see, then it went up again. You can see it went up again, came down like that. So it's just for you to just do your market analysis, and trust me, you're good to go. All right, okay, let me just look at this other one quickly for you. Now you can see this is a downtrend. This is a top, this is another top. It came down, then went up. Now you can see that the market crossed here. You can see 13 crossed 50 here at this level, then dropped. Then you can see the market went up. You can see the market went up, broke this level. You can see, so that means our down structure is being forfeited. But now you will see that the market came back and crossed here and created a pullback here, which is higher than this. So in this kind of scenario, you would have expected that, oh, the market should push higher, but instead the market also went up again and formed another top, formed another lower high like this, formed something like this, confirming that another downtrend is continuing. So basically in this kind of scenario, you could have actually made a little money from here, but right here you will understand that the market is still coming downwards, because you can see that we've had another cross here of the 13 and 50, but it didn't get to this level here, then it dropped. So those are the scenarios that you are possibly kind of going to get in the market structure using indicators. Now, one advice I just want to give to you is it's best to combine these levels with support and resistance. Like for instance, when you have a cross of your 50 and 500, make sure that where, like once this crosses downwards, you know this is a pullback, make sure that there's a confluence, that is you have a confirmation of this cross of the pullback of 50 and 13 together with a support and resistance level. So like when this cross down, it gives you a pullback, make sure that it pulls back and touches a support level. So this gives you more confidence that, oh, this is a pullback and has also touched a support level. Definitely this should be moving to the up direction. So you can now do your analysis, then follow the trend. So guys, this is how you can easily spot um, market structure using indicators. So do not forget to subscribe if you're new to this channel, and also do not forget to join the Telegram channel if you're not part of the channel, and endeavor to share these videos with your friends. And most of all, do not forget our monthly training, which is gonna do you a lot of favor, where I'll be showing you my own strategy. And also, if you want to um, learn, if you want a free tutorial, like a lot of persons have asked me, there's a link in the description below. All the links that I've mentioned are in the description below. Just go do yourself a favor to use those links. So I remain your boy Leke, KOSB Finance, and I will see you in the next video. Take care.